Creating a daily bias is by far the #1 question I consistently get asked, and how to frame a daily bias. And in today's video, I'm going to go step by step on how I approach daily bias, the questions I ask myself, criteria I need to create a daily bias, and have everything in a mechanical setting. Now guys, this is going to be a 2-part video series, so make sure to subscribe because you don't want to miss the second upload after this video. There are 2 ways I go ahead when it comes to creating a daily bias, and in this video I'm going to explain and go step by step on the first and pretty much my favorite method when it comes to creating a bias. And in the second part, I'm going to go ahead and actually reveal the other component when it comes to creating another form of daily bias. So without further ado, let's go ahead and let's get into the presentation.
Alright guys, so one of the most things that I get asked about is in regards to daily bias. How do you kind of create a framework? Is there a way to kind of have a set rule base of things that you kind of have before you enter the market? Or are there specific things that I'm looking for before, like looking for a trade and all that good stuff? So some people have this misconception that daily bias is kind of like discretionary, which means that, you're kind of just going about it in a way where, you're just kind of not necessarily winging it, but you're applying multiple concepts and trying to find specific things versus it being mechanical. Now, in my opinion, you can have a daily bias discretionarily or mechanically. And for me, I have very specific rules and criteria when it comes to daily bias or creating a framework. And I'm going to go ahead and share that with you guys in this video. Now, I'm actually going to make this a part 2 series because I think with daily bias, there's multiple ways to go about it. So I'm going to go ahead and actually just illustrate, one component when it comes to creating a bias and one framework, and then I'll include that in a part 2 series. So you want to make sure you're staying tuned because again, I'm going to be dropping a part 2 to this video. Now let's go ahead, and here are 3 major questions when I look for any type of bias. So I'm always looking for what is the current structure of the market. For me, if you guys haven't been following me around, I always consider structure to be one of the crucial points for the ways that I personally trade. Now, number 2, is price trading at a current premium or discount? I want to know, is the market currently trading in a specific bearish trend, or are we in a bullish trend on a higher time frame? And if, let's just say, we're bearish, are we trading back up into a premium? Are we trading into like an OTE, some sort of key reference point on that time frame in order for me to kind of confirm a bearish bias in that scenario? Now, I'm obviously going to show you guys examples. I'm going to show you illustrations in the next few slides. So number 3, is there a clear opposing liquidity pool or reference point to target? This is very, very important. Now, if you guys haven't already, I have a video on the channel where I talk about high resistance liquidity runs and low resistance liquidity runs. I'll link it in the description below, but make sure to check out that video. I think that video is going to help solve so many people's issues when it comes to, having good targets. Having good targets is something that isn't necessarily talked a lot about. And this is one of the crucial things for me when I have a bias. I need to have a very clear objective of where the market wants to potentially go to. Now, will it always go to it? Of course not. It's trading. But I want to have a high likelihood of the market going to that target and that objective, and that's going to be around a low resistance liquidity run signature. I'll link the video in the description below so you guys can kind of watch that video as well. So now this is pretty much an illustration of the number 1 thing that I'm always looking for is, what is the current structure of the market? Over here, we have, a very basic structure where the market is making new lows, failing to make new highs. So we have a lower high in here, lower low, lower high, lower low. So once I identify a clear structural leg, so if I'm, let's just say, bearish at this specific point in time, maybe I'm looking for, a continuation lower. So I know that the market is currently bearish on this higher time frame. Let's just assume this is a daily chart, H4, weekly, whatever it is. And I'm going to be anticipating once price reaches back up into some sort of OTE or some sort of like deep retracement, I'm going to be looking for a reference point in that area on a daily, on a 4-hour, on a weekly, and essentially look for a potential trade setup in that area. So let's go ahead and talk about the second criteria, which is price trading at a premium relative to a bearish impulse? So I'm going to be using a bearish example for this one. And nonetheless, we have, let's just assume there's like an imbalance here, right? Or let's just say there's maybe an order block somewhere up here and the price kind of trades back up into that region. I need to personally see that as well as having clear structure because I want to have that level identified as an area where I'm looking for a trade. Remember, guys, when it comes to trading overall, you want to trade the best key levels. You don't want to trade kind of in between the range. So for example, if the market is from this swing point up in here, we have a swing point down here. You don't want to necessarily maybe take a trade over here if there's no clear levels. You want to kind of wait for two things. You want to wait for the market to reach back up into an OTE, which is a 62 on the fib, and you want it to have some sort of reference point in that area, whether it's an imbalance, a breaker, a order block, whatever you guys want, something in that area that is present with time of day. Those things are going to help formulate a better trade plan. Now, I'm going to make a whole separate video on market structure. So if you're someone who's kind of new to market structure, stay tuned. I'm going to have a full guide on market structure from beginners to advanced concepts and things of that nature, how I use impulse legs and all that good stuff. So you definitely don't want to miss out on that. But for today's video, we're just going to focus primarily on having a bias. Now, does price have a clear opposing level to target? Most people, they'll be like, all right, I know I want to get short at this potential level. I know I want to get long at this potential level. However, most people don't take the time to kind of understand, hey, how far can this trade actually go? Now, for me, anyone who's been following me for a little while knows I like to typically have two targets. Something that's a low-hanging fruit target and something that, just in case the market continues to run, I can go ahead and, have that as a bigger objective, a bigger target, potentially leave some runners for a bigger move. Now, this is the thing when it comes to this type of scenario. Let's just assume that we're bearish. We have a bearish structure. Let's just say we have a bearish imbalance that's present at this current area. Now, what I want to do is, and let's just assume for argument's sake, this is the 4-hour time frame. I want to look for a potential trade setup somewhere in here. And now I want to look for the impulse to the upside that went into a quote unquote resistance point, right? Into a premium level. Inside of this impulse, is there like a bullish imbalance here, right? Is there an order block that kind of formed in here? Is there going to be something that I'm going to have a potential for a nice downside objective, even if the market doesn't necessarily make a new low? Now, this is the key thing here, and I'm going to talk about it towards the end of the presentation as well. I want to make sure that I understand which levels I'm going to have that are going to potentially be what they call FTA, first trouble area. I got that from Tom Dante. I learned it from him, where essentially the market may have some sort of, at the very least, a reaction. So if let's just say you're short here, there's a potential FTA. Again, this could be an order block, an imbalance, whatever you personally use. There might be some sort of reaction where price might actually have a bounce, and that's typically where I'll have my first TP area. Now, this is exactly why I personally like to use the higher time frame. If we are trading on a 4-hour time frame, for example, the price point from A to B in this scenario will ultimately have a wide range of pips. We could potentially have a nice 50 to 70 pip range depending on the pair. So if there's a 50 to 70 pip range from point A to point B, even if the market doesn't necessarily make a new low, that's enough for us to take a nice piece of the position off, especially if we incorporate that with a lower time frame entry. And honestly, that's the key thing for me. I want to have a good amount of range where I can work with, where I know if I can get an M15, an M5 entry, and I can target an H4 or a daily time frame level, I know my risk reward is going to be pretty high. And we're going to cover that all towards the end of the presentation. Now, again, this is what we just talked about. How far can the market go? What most people don't do is identify potential target areas and trouble areas. Essentially, is the market prone to have a pullback in that area? You want to identify it now. Some people, you don't want to identify every single level, and then now it's like you can't, like you get a little bit scared of like, oh my God, is price going to react here? You want to have it to be a logical level. And again, you want to trade the cleanest charts. The cleanest charts are going to typically have a nice range, and they're typically going to have a few areas where the market may react. Now, identify whether there is a clear opposing liquidity pool that may have been left clean. In the gold example that I'm going to be showing you guys on the actual charts, you're going to see what I mean by this. Typically, if let's just say you're looking for a buy, you want to ideally see maybe some sort of equal highs or some sort of reference point above the marketplace where the market is likely to go ahead and potentially target. That is essentially one of the most important things that I personally look for when it comes to a trading opportunity. And it ultimately really helps with having a big move, especially when there's a big pool of liquidity that hasn't been tapped yet. Now, one thing that we want to do, right? We want to wait for lower time frame entries. I'll make a whole separate video dedicated to entries, so make sure to stay tuned. Again, I just want the primary focus of this video to be about daily bias. Now, can you enter on a 4-hour time frame? Can you enter on a daily time frame and use a bit of a wider stop? Absolutely. If you're someone who doesn't necessarily care about having a tighter stop loss, or let's just say maybe you're busy, you want to go the swing trading route, you can most definitely enter on a 4 hour and have a wider stop above, let's just say an H4 level or a daily level, whatever it is. It's all based on preference. Now, let's go ahead and let's talk about what time frames to use for bias. I think it's very important to also talk about this because not everyone's going to be the same. Someone's higher time frame could be using an H1 time frame as their quote unquote narrative time frame, higher time frame, while another could use an H4, daily, weekly, etc. Personally, I like to use the weekly time frame, the daily, or the 4 hour to create a framework slash narrative. That's my preferable time frames just because again, when it comes to ranges, you have much more range to play with. H1 is perfectly fine, and honestly, in consolidation, you will want to use the 1 hour time frame in order to go ahead and create a bias because the daily, the 4 hour might be in consolidation, but the H1 might have a nice clean play or a nice clean range to work with it. Now, remember this. Do not just go ahead and short or buy because price is at a resistance or support. That is the biggest thing that I think a lot of beginner traders, even some intermediate term traders, they have this misconception that if price is at a resistance or a premium, they just automatically sell. You want to have, again, a framework. Is there, if you're going to go short, is there an opposing liquidity pool or reference points that you can target? Make sure that's in line with an overall structural play. Make sure that the sell or the resistance point is lining up with structure. It's lining up with like maybe a liquidity pool to the downside. Make sure there's just more to the idea of the trade versus just, hey, it's at a resistance, I'm just going to short here, or it's at a support and I'm just going to buy here. Don't fall into that trap. That is one of the biggest mistakes most people can do. Now, it is okay to get the bias incorrect. This will 100% happen to you. It's part of the game and you're just going to have to accept it, to be honest. That's really what it comes down to. If you're trying to seek perfection where, hey, how come the bias didn't play out this time? Listen, it's not always going to play out. And I feel like if you just mentally accept that, it's going to help you so much more being able to kind of move on from that emotional toll that's going to have on you. Now, build the skill set and confidence to stick with your bias. Don't be the trader that is constantly flipping back and forth. I see this so many times. I've seen it with like close friends where they're consistently flipping bias. One moment the market is, maybe dropping and then they start to think it's a sell. Then the market starts to push up and like, oh no, it's actually a buy. Don't be that person. Have a bias, have a trading plan, and don't deviate from it. If it's wrong and you're consistently wrong on it, guess what? That's why you journal and that's why you kind of fix those mistakes. Just don't be flipping back and forth because, again, flipping back and forth will just result in so much more emotional toll and emotional damage. Now, not every day will have a clear bias, so patience is a must. You won't have a clean bias every single day. However, you'll typically have a nice higher time frame bias, whether it's on the H4 or daily. You'll typically have a solid one at the very least once or twice per week, depending on the pair. And if you're watching multiple pairs, you can definitely get multiple trades in throughout the week. But if you're watching one pair, again, depending on the type of market condition, you'll typically find at least anywhere between 1 to 2 trades, maybe 3, depending on the week. Now, I'm a day trader. Why do I need a daily bias? I get this question asked so many times, even from people who are scalpers. This is the thing, guys. At the end of the day, having a higher time frame narrative or bias, it will allow your trades to have more range and more pop to it. I already talked about it before, where if you're using let's just say a 4 hour structural play and you're looking for the market to trade from point A to point B, on that 4 hour time frame, you will have a bigger range to work within. If you're someone who's just trading on a lower time frame, and again, I'm not saying that doesn't work, but if you're primarily focused on the lower time frame, what's going to happen is this. You are going to be in a scenario where your trading range may be limited if you're not trading in the proper direction of the overall higher time frame trend, if one is present. Because again, sometimes a higher time frame is just consolidating and there is no real bias or there's no real trend or direction. Trading in the direction of the higher time frame trend allows our day trades to be a big risk to reward potential. Because again, if we can get in a lower time frame and we target a H4 level and getting in on the M5, M15 entry, our stop loss is going to be typically minimal and our potential target is going to be much, much higher, which will, again, will result in a bigger risk to reward. Now, also, you will have better accuracy trading in line with the higher time frame. That's just a reality. of it. Like if you're trading with a daily bias, like the daily chart, let's just say, is clearly bullish, it's been in a bullish trend, we are going to have a much higher probability looking for buys versus trying to sell the market if you're looking for, let's just say, an M5 or an M1 reversal. So those are the key main points on why, even if you are a day trader and you're not someone who's holding for a long period of time, why it's very beneficial to still have a higher time frame bias or narrative. All right, guys, so let's go ahead and let's transition now into the actual charts, and let's break down this S&P 500 example. I'm going to use an example that I pretty much utilized on Twitter. This was the one I kind of like talked about and played. So again, I'm going to use this. And again, this is actually a very good example of everything I personally look for when it comes to having a bias. Now, again, this right here is a daily time frame on the S&P 500. However, you guys can use, again, H1 if that's what you're looking for, H4, weekly, whatever it is. For me, this was a play that I was looking for on the daily time frame. Now, let's go ahead and just mark out the current structure. And again, I'm going to have a full guide to structure, so just kind of bear with me on that. But for the argument's sake, let's just go ahead and break this one down. So again, I want to identify my swing points. I typically identify swing points, as the fractal play. So if you have a candle to the left right here that has a low, the candle to the right of it has a lower low, then the candle to the right of it has a higher high. Typically, this is going to be considered a swing low. Now, I'm going to show you guys a little cool thing that I use to kind of have more confluence of a key swing low. But again, just stay tuned for the market structure video. Okay, so now we have a swing high that forms in here. In this current scenario, let's just assume we kind of missed this buy over here. Price made a new high. Now, at this current time, when I'm watching the market in this scenario, I'm going to be looking for a potential scenario where the market trades back up down into some sort of key level. So when the marketplace is trading over here, price makes a new high. What do we have here? We have a potential move to the upside. The market makes a new high, and now we're looking for a potential retracement into a key level that the market may go ahead and have a reaction off of. Now, in this example right here, on this specific day, when the market is trading down into this level, I'm going to be looking for a potential buy in here using some sort of lower time frame entry or confirmation. So this is how I would determine a daily bias in this scenario. I know the market has been trending bullishly. I know that, hey, we have a break to the upside and we have a bullish imbalance in this area. Structure has been bullish. Now, again, the key thing, is there a specific reference point that I can look for on this day when the market traded down here where is a very viable, which is in line with structure, right? And again, is there a reference point? Yes, there is. Now, the third thing that I always talk about, is there an opposing liquidity pool to the upside? In this scenario, we have a lot of this current wick that could have been a potential target. So again, typically wicks are going to have, you can typically look at a wick in a sense where, you could look for it to fill to the upside. And again, if there's any liquidity pools, like let's just assume on like if you go move up to the weekly time frame, maybe you see something like here where, there's a good area where you're looking for the market to potentially trade up into, or you just want to target a little bit more into the wick. In this example, this could have been something where you just, again, you can kind of just target the upside to a portion of this wick. And again, if you want to keep it very simple, this is something that I personally use and I talk about it again with my students. If you draw, let's just say the Fibonacci, you can always use the extension 1 target. Now, I'm going to go ahead and actually just kind of show everyone this real quick, the settings. So, because I know a lot of people are going to ask for the settings. This is the extension 1 that I typically target. It is the negative minus 0.27, and the extension target is 2 minus 0.619. So again, typically, again, this is going to be like an easy way for you to kind of have a target. You can always target extension 1. And again, if you guys play this out, you'll see that the extension 1 gets respected a decent amount of time. But nonetheless, we have a clear upside objective. And again, we could even just target a new high. And again, because this is a daily time frame, the range on this is a very significant amount. So this is very simple, guys. It's the most simplistic way I can go ahead and break it down on how I personally use daily bias and how I personally use structure with, reference points and opposing liquidity pools, putting it all together to create a narrative and to create a bias. This is the simplest way I use it. I do this every single week, and these are typically my favorite types of plays. And again, I'm going to make a part 2 to this video where I'm going to show you guys a different way to kind of create a daily bias using smart money concepts. But this is primarily the number one way that I use it. Now, I hope you found this very insightful. And again, if you guys have any questions, please feel free to go ahead and leave them in the comment section below. I will take a look at them. And if I see something that people are kind of like, have more questions about, I will make an additional video onto this. Now, again, I will have the market structure video uploaded. I will have a part 2 series uploaded, and I will have a complete guide to smart money concepts. I have a lot of things coming on this channel. So if you guys aren't, make sure to go ahead and subscribe. And again, I'll see you guys in the next video.